What's up, everybody? It's Dave P with The Cream, and we got a really solid video for you today. And this has got to be the number one requested thing to discuss and the number one requested thing to get trained on. And it's all about raising private money. So I'm super excited to bring this to you. It's something I know extremely well. RJ and I, my business partner, RJ Pepino, and I have raised over $30 million and paid it all back. And we have structured numerous different types of private money deals. And I'm going to be giving you the nuts and bolts, everything that we have learned in our years of doing this. And it's not as difficult as people would think. It's not that hard. You're going to be able to do this for yourself. And really, this is the lifeblood of your real estate investment business. When you're out there finding good deals, you got to be able to close quickly. And private money is the best way to do it. It's the fastest way to close your deals. You can get the most favorable terms, and it's always good to help other people make money while you make money and create these win-win relationships with your private lenders. So we're going to be getting into all of that. As always, we appreciate you. Please like this video if you're a real estate enthusiast, real estate investor like we are, and please subscribe to the channel for more videos like this. And let's get into the nuts and bolts. We are calling today the Private Lender Playbook, everybody. And we are going to be discussing here in our agenda. The agenda is who are our private lenders, where are we going to find them, how to structure and secure deals, and really the actual script in the presentation and the overall process. So let us start with who are our private lenders. This is very important to know. Our private lenders and the private lenders that you are going to be going after and to work with, these are not money people, meaning these are not the people who work for a lending operation. They're not a hard money lender. This is not a savvy money person who has all their notes and mortgages and has their program set up. And that's like a loan shark, right? This is not what we're doing and who we're raising money from. These are people, regular people, working class people. We raise a ton of money from anything from just working professionals. This could be dentists and doctors. It doesn't even have to be that prestigious, right? It could be just a working individual. Maybe they got some money in the bank. Maybe they inherited some money. Maybe they're retired. You know, there's just a lot of people who have money out there. These are regular people who are looking for an alternative to what are the alternative or what are the most common ways to invest? It's pretty much just stocks and bonds. That's all people know. And more people are wanting control of their money. And we'll have to save this part for another video, which we can get into depth on. But we actually work with a lot of people and help them set up what is called a self-directed IRA. So maybe they have money in a traditional IRA that has traditionally been used for stocks and things like that. And then we actually educate them on setting up what is called a self-directed IRA. So they can roll all that money out of the stock market or wherever it is right now into this self-directed IRA, and you could use that money, they could use that money for private lending. But I just want to make the point very clear, this is not these money sharp suit and tie people that we're raising money from. These are people that, you know, one of the guy that I'm just working on a payoff right now, I'm getting ready to pay him off. This is somebody I met at the gym. And he and his wife just moved out to Washington, you know, and they got a little money and he's wanting to do deals. It's just somebody I have a friendship and a relationship with. And another guy I spoke to today that we have a private loan with, he is a retired dentist. He sold his practice and he's just sitting back and doing private lending with me, and he's doing other investments, I'm sure. But these are just people. This is not these professional, astute money people. Now, also, I think it's very important to know that where we're going to find them, it doesn't matter if you're exposed to every single private lender. It doesn't matter if you have a rich network. It doesn't matter if you know a lot of people. It doesn't matter. And none of that matters unless you have a good reputation, right? I mean, if you're a piece of crap and you treat people badly, no one's going to want to work with you, even if you know a lot of people who have money and stuff like that. So a lot of it is your reputation. Even if you don't have a strong track record, for real estate, if you're brand new in real estate, you still basically, you got to be a good person, and people got to be able to kind of trust you, or else you're not going to get very far in the world of finding people who want to actually partner up with you on deals. So where are you going to find them? They could be in your church. They could be, the lady who used to watch you babysit you when you were a kid. It could be literally anyone. And the way you're going to actually start to attract them, this is very important. So as a real estate investor, what I encourage you to do is get very good at evaluating deals and essentially finding good real estate deals. And if you're going to find good real estate deals, that means you need to be able to evaluate deals, and you need to evaluate a lot of deals. So we're talking get deals from wholesalers, get deals from other realtors, for sale by owner. It doesn't matter. Just continually be evaluating deals, look for equity, analyze deals, and you have to know what a good deal is. You have to. There's an old saying out there. It says, if you find a good enough deal, the money will follow. And that's absolutely true. So you got to get good at evaluating deals. This is what we teach people how to do in our coaching community. If you're interested in seeing actual deal analysis, if you're interested in listening to private lender recordings, if you're interested in getting copies of our notes and mortgages and all of our scripts and purchase contracts, you can literally coach in our fast track program for less than $100 per month. But you will find a link for that down below in the description. But here's the thing. You basically need to know how to analyze deals, evaluate deals. We use two different sources for that. We use the MLS quite a bit, the multiple listing services, but you can actually learn how to evaluate deals just by Zillow. Zillow provides more information than they've ever provided before, and we actually teach and have trainings in our curriculum on how to just use Zillow to evaluate deals. But once you get good and once you learn how to evaluate deals, you want to be telling everybody. You got to get out of your shell. You want to be telling everybody on your social network, social media, obviously, and through texts and things like that. I'm going to kind of give you some examples of how we text. But you want to start telling everybody that you are finding good deals, because you want to be out there finding good deals. And essentially, then anyone who kind of takes a liking to this, because people already are interested in real estate investing. That's why so many, on HGTV, everybody's watching these flipping shows and stuff like that. If you can convey to people that you are actually finding good deals, then you can offer to people, hey, would you be interested in learning how I evaluate these deals? Everybody loves to do this. This is what you are going to do. Everybody likes to learn this. The student, we will teach you how to do this, and then you become the teacher, and you are teaching your private lenders on how to evaluate properties. And it could be as simple as just doing a Zoom call, but you essentially are just saying, hey, is anyone interested in knowing how I'm finding these deals, and know, more importantly, how I evaluate these deals, and show them the numbers, right? And they're going to take a liking to this. And then essentially all you're going to do to ask, you're not going to say, hey, do you want to be a private lender, this and that? Say, hey, would you ever be interested, or do you know anyone? It's such a soft way to ask. Do you know anyone who might be interested in partnering up and doing some of these with me? Everybody wants to do that, right? Now, the partnership and the way it's going to be structured, which we're going to get into here, you are going to be the sole owner of the property. Let's talk about, how to structure these deals a little bit. You are the sole owner of the property, and then your lender is essentially going to have a lien against the property. And this is going to help you when you're actually explaining the relationship that you're creating here, the private lender relationship. Their money is secured by the property. The property in of itself is the collateral for the loan they're making. Okay, you're the sole owner of this property. Now, when we are still like introducing ourselves to these private lenders and showing them how we evaluate deals and showing them our process, we always address it as not so much a lender. We pretty much position it as you're going to be the capital partner because they feel like a partner. Everybody wants to be a partner. Everybody wants to participate. But essentially, the ownership of the property is going to be you or your LLC. They are going to be the first and only lien holder against this property. So if they're going to fund this deal, you're the owner. It's just like if you own your own home right now and Chase has the mortgage, you own your home, but Chase has the mortgage against the property. They have the first position lien against the property. Whereas if you didn't fulfill your promises, and you didn't pay the lender what you said you were going to pay them, they essentially could take the property from you, right? Because they have this lien against the property. So when you're structuring these deals, this is how it's going to work. They are going to essentially be the lien holder in a first position. You want to be able to explain that to your lender. See, the way the liens work is there's always a first lien, and then which is the senior lien, and then the liens below that, like a second mortgage, a third mortgage, a mechanic's lien, any number of different things would be below that senior lien. And the senior lien has all the priority. So if there was a default, the senior lien gets to essentially take over the asset, sell the asset, recoup the money, and then any money left over from that default sale, like a sheriff sale or like a foreclosure sale, would then go down to the junior lien positions. So you want to explain to your private lender or your capital partner, as we're calling it, that they are the most protected because the house that you are purchasing, that you went through this evaluation on, they see there's equity in this deal. They're the most secure because if anything was to happen to you, they could essentially take over this asset, sell it, recoup their money, plus all the interest that's owed to them, and they don't have to fight with anybody else to get their money or get that senior position. But you also want to explain to them that you and the people you're learning from, like us, we've never had a deal go bad. You really don't have to worry about that. But I want you to know that your money is secured with collateral. So, hey, if I was to get struck by lightning, you can come in and take over and recoup your money. I just want you to know you're safe. You can't get that promise in the stock market. If you buy a stock for $100,000 worth of stock and it goes down 50%, you can't just go back and say, hey, I want my money back. I want to sell this stock, but I want the 100,000. No. You gotta just basically roll with the punches on that one. So it's very secure. There's collateral involved, right? And basically, the way you are going to be structuring these deals is their money is going. You want to explain that their money is secured by the property that you are buying with their money. That is the collateral. Now, I want to ask you, I want to point out to you payments or accrued interest. There's two ways to structure your private money deals. So you got a private lender that you're going to get the loan and you're actually going to make monthly payments on this loan, or what is called accrued, where there's no monthly payments, but the interest just continues to build up and you pay it all at the end. Now, we do both types of loans, and I'm going to explain to you when to use which type of loan. So when you are doing a short-term fix and flip deal, where it's only going to be a couple months, ideally, you want to move quick on these things. Come on, guys. You don't want this, and the way to structure, we're paying 10 to 12%, depending on the lender, but really it's always, going to be 10% plus some points, or about 12%, interest to our lender. And when we're doing a short-term flip, like a transactional deal, like maybe we're going to buy something and flip it really quickly. Maybe we're going to buy something, clean it out, just kind of knock the ugly off it and, put a little work into it and then resell it for a profit on the open market, something like that. We do a lot of those quick flip type of deals. Do accrued interest, or what we do. I'm not telling you what to do. This is not financial advice, but what we do is, and you made the big time when you got to give a disclaimer on a video. It's a good video when there's got to be a disclaimer, right? But what we do is on the short-term stuff, we are doing accrued because we don't want to have to go through the trouble of setting up a monthly payment and setting up the online banking and doing all this stuff. Plus, it's so short. We just have the interest build up and pay it all at the end. Plus, if you're a real estate operator and you have a real estate business like us, you probably have multiple of these deals going on, and you don't want to have to set up payments on all these, make monthly payments on all these. It could really evaporate your operating capital. It can just basically run you dry if you got all these, if you're waiting for these flips to close. So set up all of your flips, all of your short-term deals on the accrued interest program. Now on our BRRRR deals, and if you're not familiar with what the BRRRR method is, keep watching our videos. Make sure you subscribe to our channel. We do a lot of these types of transactions, and this is where we are buying a property with private money, getting it fixed up, getting it rented, and then we will do a cash out refinance to pay our lender back with that refinance. But what we do is we actually do pay monthly on the BRRRR deals or something that we intend to refi, because sometimes these refinances, they take a long time. Here to let you know, sometimes there's delays. And, what we don't want to happen is this refinance is taking forever. The interest continues to build up in the loan. And next thing you know, now the bank, essentially when they do their refinance, the interest is built up so much of what we owe our lender. Now we have to bring money to the table. It's not a cash out refinance anymore. Now it could be worse. It could be that you have to bring money to the table to get this deal done. It doesn't feel as good. So here's the thing. When you are buying something to fix it up and get it rented, you agree to the monthly payment plan and pay them monthly on this. This way the balance doesn't continue to go up, but that is also your incentive to hurry up and get this thing rented out as fast as possible, because the rent that you're collecting is going to offset these interest payments. So remember this. On the flips, we're doing the accrued interests, and on the BRRRR deals, we're doing the monthly interest. But we want to get this thing rented as fast as humanly possible, and we want to get this thing refinanced as fast as humanly possible. But sometimes these refinances can be delayed, and I don't want you guys to have these notes in place where your balance just keeps going up because this interest is accruing, and you are then bringing money to the table when you refinance. So that's very important now. Their money is secured by the property collateral in a first lien position, and then the way you're structuring the way the interest is going to be paid, we do payments when it's a BRRRR strategy. We do accrued interest when it is a flip deal or more of a short-term type of deal. Now, the actual script, the actual process, this is what everybody wants to know. How does this work? So really, you're going to be explaining to them everything that I just taught you about being in first lien position. That's all they want to know. How am I getting paid back? So you want to explain to them either they're going to get payments or the accrued program. At the end of the day, it all adds up to be the same amount. It's just less inconvenient. It's more practical to do it the way I'm telling you to do it. The BRRRRs, to have the monthly payments, the flips, have the accrued. This is your pitch, right? The biggest part of the pitch is their money is going to be secured by the asset. And when you're buying the asset with their money, you're not paying too much, because remember what we said in the very beginning, you're good at evaluating deals. So you're showing them, hey, look, there's a lot of equity in this property, and your money is secured in a senior lien position, the most powerful lien position you possibly could be in against this property. You're lending $150. The house is worth $250. It's a very safe collateral situation. That is the sales pitch essentially, right? But you're going to want to explain the process, and you're going to say, hey, Mr. or Mrs. Lender, everything I do is by the book. Everything I do is very professional. So you're not even wiring me the money. You are wiring the money to the title company. And this is the same title company that you have your purchase and sale agreement sent to, because remember, you're in contract with the seller. You send that to the title company. The title company is going to run the title, and they're going to basically provide title insurance. And then your private lender is going to send their money then, not to you. They're not sending you a check or wiring your money to some offshore account. I mean, that is as sketchy as you possibly could be. This is a professional title and escrow company, right? They have their own insurance, and your private lender is going to send the funds right there to this title and escrow company. And then when your seller comes in to sell the house, when they sign the dotted line, when they are selling you this property, the money is already there to fund this transaction, right? So explain to them how professional the process is. And when you are signing, when the seller goes in to sign the docs to actually give you ownership and deed you the property and sign all those docs, that's when you are signing docs as well. But the docs you're signing are the note, the promissory note, which outlines the terms of the loan that you have with your private lender, as well as you're signing that mortgage, you're signing that lien, you're signing to guarantee to pay that promissory note and to pay those terms, or else you're going to forfeit that collateral, and there could be more repercussions if you're signing a personal guarantee as well. They can come after you personally. I mean, this is a serious deal, but that's what you're signing at the title company. It's important for the lender to know they are sending their money to the title company. They're not sending it to you or some random place. Then when the seller goes in to sign and give you the ownership of the property, that's when that private money's lender's funds will be used to buy the house, give the seller their proceeds. You are going in there now to sign the note and the mortgage. You are now the owner of the property, and that's when you got to get to your checklist. And this is another video as well. What's the checklist? You got to get utilities switched over. You got to get this property insured, and you better get your rehab crew working immediately. Time is money. Get these guys working. And if this is going to be a bird deal for you, you got to start this refi process. Ideally, if you learn from us, we're going to have you send all of your bank statements, everything that you need to get a bird loan refinance done. They should already have that before you even buy this house, right? They should already be getting you pre-qualified for your refinances, right? But some lenders then, when you're actually doing your refinance, they want to see that the property is rented out. In fact, most do. So maybe the lender to refi you already has all your information. You just need to get working on this thing, get this thing fixed up, get this thing looking good, and get it rented out, get it producing. If it's a bird deal, got to get that lease, because the lender is going to require that lease before they do their refi. But that's a whole nother video too on how the burr mechanics work, which I'm happy to do for you. Let me know in the comments below if that's something you'd like to learn more about. But let's go through this here real quick, just in summary. Who are our private lenders? Our private lenders are everyday people who have cash, who are looking for an alternative investment to the stock market, the bond market. You're able to pay much better returns. And remember, their money is collateralized by a really good deal, right? And they know it's a good deal, and you know it's a good deal because you learned how to underwrite these deals. You know what you're doing, right? And this is what we teach you how to do. So where are you going to find them? A lot of these are going to come from personal relationships. That's why you've got to be a solid person. You got to be a good human being. No one can do that for you. You got to be a solid person, and people are going to want to work with you. And the way you're going to find them is you're going to let everybody know that you're getting good at finding deals and evaluating deals, and just basically say, would anyone be interested in seeing how I do this? People will raise their hand. But ideally, these are direct relationships. These are family, friends. These are people from church. These are people you used to work with. These are regular people, not fancy money people or loan sharks or anything like that. You're structuring your deals. Remember, their money is going to be secured in that first lien, senior lien position. On our BRRRR deals, we prefer to make monthly payments to our lender. On the flip deals, we prefer to have the interest accrue and pay all the interest at the end. And the actual script is essentially just going through the deal, explaining the process, and it's really important for them to know that they are not just sending the money to you directly. They will be sending the money to a title company, an intermediary. So that is it in a nutshell, everybody. Hit us up. Let us know if you're interested in hopping in our fast track program. Like I said, it's less than $100 a month. You get everything. You get actual recordings of me raising money. You're going to have all of our paperwork, notes, mortgages, scripts, the whole deal. There's a link below, a Linktree link. You can get our free book on wholesaling, which is very solid. We've gotten tons of great feedback on that. And let us know if we can help you in any way. Let us know in the comments what other videos you would like us to cover and what other topics you'd like us to cover. And we appreciate your support as always, and we will see you all on the next video.